Hi mga kapushers, welcome to my vlog, Bricks Spot. So my name is Eric Bricks Lunas and our discussion for today is all about business finance, so specifically capital budgeting. Management is originally hired to take control of the funds of the owners of business. So in most cases, it involves maximization of the earning power of these funds. So planning and control of the capital expenditure is therefore a basic executive functions. So as such, the budgeting of funds for capital expenditure is an important activity of management. So in this discussion, the capital expenditure or capital budgeting as an important segment of business finance is presented, and among those included are the relevant concepts pertaining to investment, risk, valuation, and uncertainty. To understand the capital budgeting concept, let us first define capital expenditure, capital budgeting, valuation, and investment. So what is capital expenditure? So capital expenditure refers to the substantial outlay of funds. So pag sinabi natin outlay, it is the amount of money we spend on something. So meaning, gastos. So what is the purpose of this? So the purpose of this is to lower cost and increase net income for several years in the future. So sinabi natin kanina is outlay, substantial outlay of funds. So meaning, may ilalabas na pera and at the same time, may expected na something in return. So ano-ano nga ba yung classifications ng capital expenditure para mas maunawaan natin? Number one is replacement investment. So what is replacement investment? It refers to the investment on replacement of worn-out or obsolete facilities. So for example, may mga kagamitan or machinery sa isang company na mga luma na pero functional pa. Yun ang tinatawag nating obsolete facilities, or kung hindi naman, yung mga totally damaged na talaga na hindi na kayang gamitin. So kailangan maglabas ng pera yung kumpanya para makabili ng mas bago or mas magandang machinery. Kasi makakatulong yun sa future para mas kumita sila or madagdagan or mapataas yung kanilang net income. So yun ang papasok sa kanilang investment or replacement. So number two is expansion investment. So this type of expenditure will provide additional facilities to increase the production and or distribution capabilities of the firm. Pwedeng palaki nila yung kanilang business, palawakin nila yung kanilang business, magdagdag sila ng mga laborers. Number three is product line in new market investment. So this refers to the expenditure on new products or new markets and on improvement of old products with the combined features of replacement and expansion investment. So dito papasok yung gastos ng isang company sa pag-innovate ng kanilang product and pag-market. Number four is investment in safety and or environmental projects. So this is also called as mandatory investment and non-revenue producing projects. These are expenditures necessary to comply with the government orders, labor agreements, and insurance policy terms. Ni-discuss to further sa business ethics and social responsibility. Number five is strategic investment. These are investments designed to accomplish the overall objectives of the firm. Last one is other investment. This catch-all term includes office building, parking lots, executive aircrafts, miscellaneous, etc., etc. So let us proceed to capital budgeting. So capital budgeting is simply the planning and control of capital expenditure. This is essential because it provides a systematic evaluation of the firm's alternatives, and it helps management in choosing an alternative that will provide best yield for the company. Next is valuation. Management is, at times, confronted with problems of evaluating a proposal. When the proposal's real worth to the firm is determined, so the process is valuation. Next is investment. So what is investment? So investment is made when a firm spends some of its funds for the establishment of a project. By doing so, the opportunity to use the same funds and other possible projects is lost. Investment takes two forms. So one is initial investment, second one is later investment. So what is the difference between initial investment and later investment? So initial investment refers to the amount that has been devoted to a project until it generates cash inflows from operations. The second one is later investment. Later investment are expenditures made after the first cash inflow. First investment is yun yung pinakaunang amount na ipinasok mo sa isang project. Halimbawa, kumita na or may na-accumulate ng pondo dun sa operation mula sa initial investment, kinuha mo yung pera at ginamit mo ulit para sa another operation. So, ang tawag na dun ay later investment. So, let us proceed to the objectives of capital budgeting. Number 1 is establishing priorities. So, diba, the resources of the firm is said to be limited. So, the total number of opportunities available for investment cannot all be accommodated by the firm. Capital budgeting will help to solve this difficulty. So, this is possible because investment priorities are established in capital budgeting. Second one is cash planning. So, bakit mahalaga ang cash planning sa capital budgeting? So, the objective of the cash planning activities of the firm is to ensure the availability of funds that will be sufficient to meet its cash requirements, including those concerning the acquisition of capital assets. Periodic cash expenditures estimate included in the capital budget helps to attain such objectives. Third one is construction planning. So, isa to sa mga requirement for capital budgeting. So, the objective of construction planning is to minimize the period expended for the construction or acquisition of a capital asset. So, the construction plan will be presented before the capital budget is prepared. So, this requirement ensures the preparation of such plans. Next one is eliminating duplication. So, what is the purpose of this? So, a centralized capital budgeting activity will help identify efforts undertaken at various levels in a decentralized organization. So, the duplication of efforts as a result will be minimized if not totally eliminated. Another one is revising plans. So, bakit kailangan natin minsan baguhin yung plano or magkaroon ng plan B or plan C? So, changes in the environmental factors may require appropriate revisions in the authorization of investment projects, which include expected profitability, construction cost, and the timing of startup, where coordination with related activities is essential. So, such requirements will be made obvious by a good capital budgeting system. So, a timely response to such problem then becomes a possibility.